If you're an independent contractor and want to understand how to file and pay taxes, then this video is for you. Specifically, I'll be going over what forms you have to file as an independent contractor, how to pay taxes as an independent contractor, and tips to ensure that you stay out of IRS trouble. Let's go ahead and get started, shall we? Welcome back to the channel. I'm Krystal, a CPA here at Life Accounting, where we are dedicated to helping you save on taxes and build wealth. If that's something that interests you, then please go ahead and subscribe to the channel so you don't miss out on future videos. And do me a favor and give this video a thumbs up. It really helps us out. Also, as always, if you have any questions, comments, thoughts, or just want to show your appreciation, then feel free to comment those down below. All right, so first up, what forms do you have to file as an independent contractor? Good question. The answer to this depends on how your business is set up. As an independent contractor, you're either a sole proprietor, single member LLC, or a single member LLC taxed as an S corporation. If you fall into one of the first two categories, the forms you file will be the exact same and you're also taxed the same as well. So for sole proprietors and single member LLCs, you'll file Form 1040 plus Schedule C and Schedule SE. Schedule C and Schedule SE are not separate tax returns, but are simply schedules that are attached to your individual tax return or Form 1040. Schedule C is used to report the income and expenses you incurred as a part of your independent contractor work, which is why it is so important to keep track of your income and expenses during the year so filing these forms can be much easier. Schedule SE is also required to be included with your tax return as a sole proprietor and single member LLC because it is used to calculate your self-employment tax liability. Schedule SE for self-employment. Self-employment tax is currently set at 15.3% of your self-employment income up to $137,700 for 2020, or up to $142,800 for 2021. However, only 92.35% of self-employment income is subject to self-employment tax. So after subtracting all of your contractor expenses from your contractor income, you would owe self-employment tax on 92.35% of what is left over. For example, if you received $100,000 in revenue and had $40,000 in expenses, that would leave you with $60,000 of self-employment income left over. You would owe 15.3% in self-employment taxes on $55,410, which is 92.3% of $60,000 in self-employment income. And 15.3% of $55,410 is $8,478 in self-employment taxes. Did you follow that? If your self-employment income was $150,000, you would only pay 15.3% of self-employment tax up to $142,800 for tax year 2021. The amount above that would not be subject to 15.3% in self-employment tax. All of this would be reported and calculated on Schedule SE. Keep in mind that self-employment tax is not the same as federal and state income taxes. So once Schedule C and SE are completed, those numbers are then transferred to your Form 1040 where federal income taxes are calculated as well. And the income taxes due would depend on your individual tax rate, filing status, deductions, and dependent information. But let's say as an independent contractor, you're a single member LLC taxed as an S corporation. The forms and taxes you pay will be different. First, you will need to file Form 1120-S, which is a separate tax return from your individual tax return. Similar to Schedule C, Form 1120-S will report your contractor income and expenses incurred during the year. This form must be filed by March 15th. In addition, you'll need to file Schedule K1 with Form 1120-S. Schedule K1 shows your ownership in the business and the income you earned from the business. Since you're an independent contractor with no partners, only one Schedule K1 would need to be filed. From there, you would use Schedule K1 to prepare your individual tax return and calculate the federal and state income tax you may owe. Single member LLCs taxed as S corporations do not owe self-employment tax the way sole proprietors and normal single member LLCs do. Instead, S corporations only owe self-employment tax on the salary paid to you as W-2 wages. So you would have to set yourself up as an employee of your S corporation in order to only pay self-employment taxes on the wages you pay yourself. The income you earn above the salary you paid yourself from your S corporation is considered a distribution and only subject to federal and state income taxes. We have a really good video on this channel explaining the tax differences between an LLC and S corporation, so be sure to check that one out after this video. Let's recap the forms and taxes you are required to file as an independent contractor. If you're a sole proprietor or single member LLC, you need to file Form 1040, Schedule C, and Schedule SE by April 15th. You would owe 15.3% in self-employment tax on your self-employment income up to $142,800 for tax year 2021. You would also owe federal and state income taxes on your self-employment income, and those amounts depend on your filing status, individual income tax rate, deductions, and dependent information. If you're a single member LLC taxed as an S corporation, you would first need to file Form 1120S with Schedule K1 by March 15th. You would use Schedule K1 and Form W-2 from the S corporation to prepare and file your individual tax return. Self-employment tax would only be due on the W-2 wages you paid yourself, and the income earned above that would only be subject to federal and state income taxes. Did you get all that? Great. Now, let me give you some tips on how to keep everything clean and clear with the IRS. 1. As an independent contractor, you might receive Form 1099 miscellaneous forms from your customers or clients if they paid you more than $600 during the year. Hold on to those 1099s. Because if you do receive a 1099 from a customer, that customer also filed that 1099 with the IRS. So the IRS already has information on the income you earned, meaning you should be reporting that income and including it on your business tax forms. If you don't, the IRS will send you a notice recalculating any additional taxes you owe and penalties and interest for not including that income originally. 2. Pay quarterly estimated taxes. If you expect to owe more than $1,000 in self-employment taxes, then the IRS requires you to pay quarterly estimated tax payments. You can mail in or make these payments online at irs.gov. But essentially, quarterly estimated tax payments are tax payments made at the end of every quarter during the year and is a way for the IRS to receive their money before you file your tax return. You can use Form 1040-ES to help you calculate your quarterly estimated tax payments, but to keep things simple here, as long as you pay at least 110% of your prior year's tax, the IRS can't charge you penalties and interest for any underpayment. 3. Have a separate bank account for your independent contractor income and expenses. Not only will this prevent the commingling of business and personal expenses, but will make filing these tax forms much easier. And if the IRS challenges you on anything, it will be easier for you to track down an expense or deposit. There you have it. I hope you have a better understanding of how to file your taxes as an independent contractor. Please be sure to give this video a thumbs up and comment any questions down below. Until next time, I'll see you in another video.